Hello and welcome to the Alt Asset Allocation Podcast. Today's interview is with Vikram Chander. Angel investing is often touted for very high returns. Uber, for example, based on the IPO price of $45 a share, it's lower now, would have netted you a cash return of 5,000 times your initial seed investment. I'd take that. However, it's really not that easy. Here's some stats. 90% of new startups fail. 75% of venture-backed startups fail. Under 50% of businesses even make it to their fifth year. This interview is with Vikram Chander, who is the founder and managing partner at Krewe Capital. We shared an investment panel in early 2020, and I was fascinated by how well thought out his macro views were, in addition to his great track record in VC and angel investing. Vic talks about his experience with angel investing and how to get involved with angel investing syndicates, which is his favorite way of investing in startups. If you're interested in angel investing, I'd encourage you to check out episode number 2 of Investing with Startups with WeFunder. They're making it much, much easier for the ordinary investor to get involved with startups. Also, before you listen, please don't forget to like or subscribe to the podcast, or even better, leave a review. This helps more people find the podcast and keeps this thing going. It really helps. Without further ado, angel investing with Vic. Enjoy. Good morning, everybody. I'm here with Vikram Chander, who is a startup enthusiast and investor. He's the founder and managing partner at Krewe Capital. Welcome, Vikram.
Thank you.
Good to see you.
Yeah, likewise, buddy. Honored to be one of your inaugural guests.
Yeah, absolutely. So you and I shared an investor panel a couple of months ago now, well, probably about 3 months ago. And I've always known you as an angel investor and very much keeping on top of financial markets, but I was pretty impressed by the way that you had a very broad macro outlook on a number of different asset classes in addition to, angel investing and startups. So I'm really looking forward to this conversation going into a number of different topics. I wanted to start off today, just a little background, who you are and where you come from.
Sure, absolutely. I am currently in my hometown of New Orleans, riding out this pandemic, this moment in history like everyone else. But yeah, so originally from New Orleans, my mom's a social worker and a Head Start teacher. And that definitely informed a lot of my, the way I view the world. And my dad was a civil engineer. So the stuff you can imagine, he designs those oil rigs and bridges and heavy construction and industrial type stuff. So pretty standard middle-class life here. Big, the unique thing for me, and it gave me kind of informed my worldview, is having being an immigrant, a first generation in the United States, and having a pretty big and extensive family who, for the most part, all of them have made it to the United States and have done quite well. And they've done well in different industries. Obviously, the sort of stereotypical ones for Asian Americans, medicine, law, but we have had some, tech people as well. And they just caught their wave at the right time. So despite being from New Orleans, a pretty small market, I was able to see just there's a much bigger world out there. So, went to undergrad at a tech university, Georgia Tech. My first job, and it's actually very relevant right now, was with the OCC, the Office of the Comptroller of the Currency, which does the oversight for national banks. And I was just a young pup out of school, had no idea what I was doing, but that actually it was the sort of the excess of the biggest banks in our country leading up to the global financial crisis that has sort of, in a way, put us where we are. But it informed my view of the way money moves around the world and to think macro level. So that sort of was the impetus of where my interest in investing, my interest in finance started. But it also never really felt like my world. I'm just a guy from New Orleans, you know what I mean? And but that kept me in the game. And then I ended up having to go through a pretty unusual event, Hurricane Katrina, that almost happened immediately. 1 year into that job, I basically had to come back home, rebuild my parents' house. And then I got my foot into real estate. And then real estate was one of the other industries that was blossoming in the late 2000s. And it had a lot of bubble-like qualities, but in New Orleans it was a lot driven by the rebuilding of the city. So, go back a decade, we're sitting in a very similar environment. It felt very bubblish, financial assets, real estate assets. I'm excited for my future. I realized I need a little bit more training, started applying to grad school, and the world falls apart due to some of the indulgences, let's call it that, of the biggest financial institutions in our country. And it has a lot of similarities. It was like my life came to a stop. A lot of people who lost their jobs, life came to a stop. Fortunate for me, I got into business school, and I was in school from 2010 to 2012, and was able to see how the world as a whole kind of patched up this massive hole that was created, and you quickly realize that self-policing of the financial system is exactly what you would get. You expect the results you sort of get. I finished that. I graduated into a pretty, rocky economic environment. Jobs were limited. You sort of took what you got in 2012, but you could see the tea leaves that we're going to have a nice, fluid decade ahead. So most of my classmates were getting jobs, as opposed to when we got in, we were totally afraid that there wouldn't be a future for us. Just like it kind of feels like that. It does right now. I decided to go the more entrepreneurial route. I went to India, where my parents are from, and my dad specifically was born into a family that was a physician. His father was a physician, my grandfather, and he built a hospital. So that property was sitting there. And because my dad was an only child, which is kind of unusual, and he came to the United States, we were left with sort of this reality of either we're going to lose this property if no one goes and attends to it, or me essentially has to go back there and sort of sort this out. So that's what I did. So it was 2012, 2013, 14. I was bouncing back and forth between the States and India, and it was so much fun. I mean, it really gave me perspective. In 2015, we were able to exit that. We repositioned it. We marketed for sale. We sold it, and that created a financial windfall. And then I became, someone who watched the markets from a kind of a interest perspective, almost like a sport, to actually being in the game. And from then on, from 2015 to 2020, I have been dabbling in angel investing and also investing into the financial markets. We were on the back end of a pretty nice bull run. Things were getting very frothy in the late 2010s, just a couple of years ago. And I was just riding that wave and kind of figuring out where my foot in the world would be. So that's sort of my story.
Definitely. Awesome. So I'm curious to dig in a bit. It sounded like you started dabbling in real estate in New Orleans post Hurricane Katrina, which was great timing, I'm sure. And then also real estate in India.
Right.
So if you could please talk about, high level, what are the differences of dealing with real estate in a place like India versus a place like the US or specifically New Orleans?
I have to preface this by saying they were shockingly similar, because New Orleans post Katrina, we call ourselves Banana Republic to begin with. Post the greatest natural disaster in American history, it was even more Banana Republic-ish. Ironically, the temperature and the humidity and the heat feels very similar as well. So I was prepared in both circumstances for a lot of just frankly headache and stress, and both presented both those realities. The only difference was I was probably a decade apart in age, and your willingness and the way you value your time changes as you get older, correct? But I will definitely say that what I learned in New Orleans, sort of the frustrations, the lines, because you can imagine post-Katrina, everybody needs something done with their property. There's so many transactions happening. So there was just a lot of waiting. And in both circumstances, the properties that I worked on in New Orleans and the property that I was dealing with in India, they had to be transferred ownership to somebody who could be a better steward to them, frankly. So really, I was in New Orleans specifically. I started by gut rehabbing 3 properties. One is still a rental property I own. The next thing I did was I worked for a developer, and we did prefab housing offsite, and we redeveloped some of the mid-market, I would say B-class commercial real estate in the city that had been flooded or destroyed because of Katrina. And the long story short was we were getting it to a place and then handing it over to an investor who can bring it to market and make the property its highest and best use. And my project in India was very similar. Obviously, cultural differences, language barriers, but just a lot of similarities. I mean, the business gives you thick skin, and it is actually one of the things that created my interest in the liquid financial markets and angel investing, because real estate, as glamorous it can be and is as lucrative as it can be, it comes with a lot of pain and heartache, and just requires a lot of patience, and nurturing. But fortunately for me, both periods of my life, both projects ended successfully, and I was able to kind of get out of both markets right when they were peaking.
Nice. Well, that's always good timing. Although as an investor, it's always pretty bad. Well, it's tough. If you make big wins in your first couple of investments, then it kind of shapes the way that you invest going forward.
Right.
I'm curious. So liquid investments, it sounded like you got more interested in, but angel investing is a very illiquid investment with also lots of headaches. So I'm curious how you balance those two, because they're very different.
Well, I should probably back up and say the impetus or the interest in angel investing came out of those real estate experiences. Real estate, even though you can work with a team, it's a very typically a smaller team. Your development team can be 3-4 people. Almost everybody else, your architects, your attorneys, your surveyors, et cetera, are third parties. So you are typically in an office with 2 to 3 people. And in my case, there were always males. So I was looking through the lens of the world through, just a handful of eyes, on my team. And when I finished that project in India specifically, it really was so much self-driven that when I finished that, I was like, I want to go in the exact opposite direction. I wasn't thinking duration of investment. I was thinking of return on investment in time. And I was thinking of that in terms of relationships, friendships, working with a team that's going to grow and scale fast, all those human dynamics that make startups a little bit rocky and dysfunctional. For me, I was craving that. Having worked on, projects, like I said, in a very small team or just by myself, self-directed, I love the fact that, when I finished the project in India, I was entering a world where, it was pretty easy to get funded as a startup. And it was easy to kind of hire and market for positions. The young people were willing to take a chance on a startup in return for equity or just to work on a project they're passionate about. And that energy drew me in. So I wasn't thinking about whole period of my investment dollars. I was thinking of what kind of ROI will I get as far as the people I'll meet, the community I'll create, and the network, frankly, that I will build from scratch because I'd spent so much time abroad. So that's what brought me into the startup world.
Awesome. And I'd be curious just to dig in a little bit deeper about startup investing, angel investing.
Sure.
I mean, what is kind of your overall investment thesis? What kind of investments do you look for? How do you find them? If you could just expand on those things.
Right. So I would say that it's been dramatically shifted in the last several months, naturally. I think COVID is an absolute accelerant, game changer, and brick wall for certain industries. And I don't think of startup startups as a whole as an industry, but I definitely think that some of the things that I was looking at, the deal flow I was just evaluating just a handful of months ago, I just think you're like dead on arrival, you know? So, and you feel for every one of those founders and teams, but you just, when there's a crisis, you have to kind of triage the most important things. And trends get created and consumer behavior changes rapidly, and it can stay that way for a very long time. So for me, like, my observation is that I moved to San Francisco in 2015. And I was there 2016 and 2017. One of my best friends from business school was working at 500 Startups. So that was my first introduction. I mean, 500 Startups is obviously a very well-known incubator, accelerator, and, they make pretty generous investments into a large group of startups. So I was able to sort of see and get access to deals very early. But I also had that sort of East Coast view / reality of also working in real estate, that I wanted to see like a Excel pro forma with like a handful of tabs, the PowerPoint alone and a 5-minute, elevator pitch or 1 minute elevator pitch was never enough for me, but it gave me, you could see the way the world was trending. You could see you could see how the youth was looking at the future. So I actually was pretty stingy with my investments in the beginning because I had this huge amount of skepticism. I had been through, a couple of crises, like I've been through Katrina, I've been through the global financial crisis, and I was like, but I was very fascinated too. And I was proven wrong many, many times about how quickly startups and young teams can, create a community, frankly, and a loyal community. So my thesis has always been, if I can't add value through my investment dollars, but I find the team or the founder interesting, stay engaged, help them any way I possibly can, introduce them to my network, send them a podcast episode 3 months down the line that might be relatable. And I achieved the third out of my 3 objectives, which is I created a network and a community that I always wanted. And I have one in the West Coast now. And when I moved to New York City in 2018, I did the same thing, and I created one in New York. And, I've heard from a lot of them in the last 4 months, mostly like, hey, Vic, what would you do? Or are you still investing? And frankly, like a lot of my priority in the last couple of months has been moved to my portfolio, which was, actively managed in the market, and the market has been very volatile. So I have been giving people more, moral support and helping them thinking about maybe consolidating or even ways to unwind some of their positions, some of their, strategies. So I think we have to, we're entering a period of at least I think another 12 to 18 months of uncertainty. So it's cut and survive as much as possible,
Yeah, that makes sense. So are you still actively angel investing right now, or it sounds like it's more scaled back?
I am. And I think I think investing is very broad. So deal flow hasn't actually reduced for me. It's gone up. I mean, I'm part of 2 or 3 syndicates. I'm part of a syndicate with Jason Calacanis. So I get 2 deals a week from that. The benefit of that is they're doing demo days virtually. So I literally do not feel like I'm missing out by not being in New York or San Francisco right now. I have deal flow from my alumni university. Like I'm part of the Georgetown, angel community, and deal flow hasn't, come down from that either. So, but what I have been thinking about is duration now, because there is a cost of capital now. There is an opportunity cost. When you have when you have public companies like Amazon or Zoom going up 30% in a month, I mean, that's a pretty decent return on investment on an angel investment. Like, let's be honest, like most of them are going to bust. Some will 100x, and the likelihood of you getting into those ones are pretty low. So if you get a 5-bagger or a 10-bagger, that is sort of the numbers I was looking for a startup to achieve in 5 years, 10 years.
Yeah,
You
and
can
you
get
were
that in
expected to be locked up for that whole time, right? To have
exactly,
liquidity the whole time. It's a game changer.
exactly. You can get that in Hertz, 3 hours.
Oh God, please no.
Yeah, no, but the point is that it just, I'm not, I just, I'm not at the place right now where I have to be a little bit practical, you know? So what I do is, you know, I allocate half a day a week to go through those pitch decks, and maybe 1 out of 10, I loop back to them and I say, listen, let's have a conversation. Let's do a Skype call. Let's do a Zoom call. I want to learn more. Whereas not more than 6 months ago, it was like, I need to get in this right away, or it's going to be oversubscribed. That's how quickly the world has changed. I now feel like I have the leverage. I can tell them, hey, wait a week, wait 2 weeks. And so that's sort of where I am right now. And my intention is to get back into it when we have a little bit more clarity on the world. The ones who are positioning and setting themselves up or already were in the space to benefit from this work from home environment. I mean, what we saw in 2010 to 2020, I think we'll see that 2x, 3x. The pace of technology is not slowing down. The problems of the world is not, they're escalating. So that's just, all these things are making it ripe for rapid growth in the startup, ecosystem, in my opinion.
Right. So it sounds like you have a good amount of deal flow. Most of that's coming through the syndicates you're involved and the alumni network. Do you also get cold email pitches every once in a while, these sorts of things?
I do, and I wouldn't call them cold. They come through, it comes through a network I have. After business school, a lot of my friends went into the startup space, or they went into, frankly, they're asset allocators. And if you're an asset allocator in the last, say 2015, 2020, almost everyone had a portion allocated to angel investing. So in a weird way, I have these like professional screeners out there. So when I get a cold email, it's usually coming from, 1 degree or 2 degrees separation from me. And I actually have a lot of confidence in the cold emails I get, because it's usually like, hey, Vic, I got your email from your friend, your friend, X or Y. And that tells me like, okay, it's worth checking this one out. So am I actively hunting as much as I was in 2015 and 2016? I'm not, but circumstances have changed, and you have to sort of, my brand is still, my professional ambitions are definitely being informed by what's happening in the world. So, I'm being flexible, because I think you have to be flexible during this time.
Absolutely. So I'd be curious, it sounds like you're seeing a lot of different pitches and startups and different categories. These are spread out across a number of different industries. What key themes or macro views do you have? What kind of types of startups are most interesting for you at this point? And obviously this is being recorded during COVID time, so maybe
Sure.
it's changed over the last couple of months, but what key areas spike your interest the most within the startup angel investing scene?
So I think, we started off the conversation talking about that I'm the founder and managing director of Krewe Capital. Krewe Capital is something I created, and that Krewe part of the capital is in New Orleans. We have we have the tradition of Mardi Gras, and we have these tribes, these community, and we call them crews, and it's sort of like kin. It's your people. And it's not an offensive term, and it's not a device, or it's like, hey, that's part of they're my crew. You can think that's like playground talk, but it's KREWE. So for me, when I got into sort of this space, angel investing, I realized that I would have to like weed it down, come up with a thesis, or come up with a space that I enjoy, because the deal flow was overwhelming. So the Krewe part of the Krewe Capital is I love startups that have to either have to do with community, creating community that things that create joy, things that can go viral fast, frankly, you know. And I mean, I think the biggest and most notable example in the last like 2 years is probably TikTok, right? And that would be a dream to be in that one originally. But I always trended to things that where people were taking advantage of our changing relationships with technology and our changing relationship with our work habits. We are obviously spending way more time on our phone. We are now connecting virtually. So I see those trends actually not changing, but accelerating. The co-founder of Twitch actually went to my high school. And, if you told me gaming 10 years ago was going to be so important that if Twitch went down, for 24 hours, people would just lose their mind if they lose their accounts. So, it's catching the way that we are interacting and engaging and creating friendship and meaning in our life. So those are the trends I like. Now there's many, many, many trends happening right now, and headwinds for work from home, headwinds for SaaS, tailwinds for SaaS, tailwind for work from home. And you can come up with little niches and theses around each. But for me, I've always, focused on founders and teams that can get people really passionate about meeting in person or meeting virtually. So that's the space I like to work in. Now, charging for things is another subject, But I as much flack as we work God, I was a huge fan of it. I think they fundamentally changed the way people think about work. And maybe they'll have an opportunity to kind of re-enter the space and but the one thing that's undeniable is that almost all of us have been into a WeWork. We've connected over a WeWork. We've chosen to work or do a coffee meeting or whatever at a WeWork over a coffee shop. And that's something that I'm really curious about, is how we connect in the workplace and exchange ideas going forward.
Yeah, it's wild to see how quickly the rest of the world kind of accelerated. We've been working remotely and in these communities of location independent workers for a number of years, and sure. It's crazy now just being out in California. I'm meeting people from New York who now say that, well, I can work from anywhere sort of mentality, that we've been saying for years, and it's crazy to see the rest of the world catching up with this. Wait, you mean I can actually work just as efficiently from anywhere in the world? And it's interesting to think through the longer term implications. So do people start leaving cities in mass? Do they start going to foreign countries where the much lower cost of living? So these trends that have kind of started within this location independent digital nomad world now rippling out into the broader society, I think it's very interesting, and your thesis with crews and communities becomes oh so important in that aspect.
It's very interesting. It's very. We should put this on the table that it is very much a privilege and a luxury that a few of us or a handful of us have, but had before, and a lot more people are coming under the fold. But it certainly is a privilege. It comes with its pros and cons. But it is a trend. It is a shift. It is a drug, frankly, that once you experience, it's so hard to go back, as you and I both know, right? So the opportunity is in its infancy, and I think the unique aspect is that we now have some very well-paid employees of some very well-known brands and companies, some of the biggest in the world. Have said that their employees may be working remotely for another 12 months.
Until there's a cure, right? I mean, some have publicly said that, which is God knows when.
For sure. So the ripple effect in the commercial real estate, the ripple effect in residential real estate, there will be a lot of opportunity and work for people who are willing to put their head down and fix or tackle or ride these waves, these ripples that are going to be coming out of, so I'm actually ultimately optimistic. I think it's going to create a ton of opportunity and just frankly a new reality that we're all going to get to experience.
Oh yeah.
So it's exciting.
Well, I mean, it's exciting for the workers that now are location independent, can work from anywhere, but it also should be very terrifying, because me expecting a salary here, well, now they can hire my position and I don't have to be in this position in this location. So they can hire from anywhere in the world at this point. Well, my salary here, there's a ton of people willing to do it at here or even here or here or here. And they can do just as good of job as me. And if I don't have to be, if it's not location dependent, then suddenly the smorgasbord of available options for that position get very large. So it gets a little terrifying as well. So I'd be curious to jump into, it sounds like a lot of your angel investments you do through syndicates. So if you could walk my listeners through how a syndicate works, kind of the nuts and bolts of how this process works of investing in an angel investment through a syndicate.
Sure, absolutely. So just to be clear, I mean, this is all relatively speaking. If you look at the duration of time and we think about financial markets, investing in startups, angel investing is you could say it's pretty much in its infancy. It started maybe less than a decade ago. I think for me, I think it really just took off when AngelList was founded. AngelList is sort of almost like a Reddit, a Craigslist, a forum, a meeting place for startups, founders, people looking for jobs, and investors, with a very basic and clean UI. It is the LinkedIn for the startup community, frankly, as far as I look at it. So the beauty of that is you could be sitting anywhere in the world, Kansas, Alaska, doesn't matter. You can sort of see who's hiring, what jobs are out there, and trends. And frankly, it was a way to democratize angel investing. Angel investing, typically, the rules state is that an investor has to be accredited. So they have to have a personal milestones, either a salary or a liquid net worth. And fortunate for me, I qualified for that. So what I initially did when I started on AngelList, and I said, hey, I'm blah 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 at Crew Capital. I'm an investor, a startup enthusiast. And within 24 hours, I was getting emails like, hey, do you want to look at my pitch deck? Hey, blah 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 blah. We're doing this, we're doing that, can I have a minute of your time? And I literally took every phone call. And then when I was in San Francisco, I was able to do a lot of them in person. And it was incredibly informative. But one thing that did inform me was that there was literally no barrier of entry to this space. So I quickly realized that I'd be, this game is about quality deal flow. And just like anything in the world, the good stuff gets gobbled up quick, right? So I was like, either I step out now because it's, I'm a little bit too late to the game. It's going to take me a decade or half a decade to build a network, and do I really want to put in that time? And then the syndicate structure kind of came out, and some of the more experienced, well-heeled investors in frankly, Silicon Valley were like, this is an amazing opportunity. I can do way more deals, take way more shots on goal, and put a fraction of my money if I get enough qualified investors, because there's no shortage of appetite of people who want to angel invest. I just have to get them under a structure that legally allows me to kick them deals and take a small carry if a deal is successful. And so once I learned that structure, I felt like I fit the perfect, almost textbook kind of definition of what an angel investor would be. I'm enthusiastic about the space. I qualify, financially. I have I have enough training to know what I'm doing. And once I sign up to be a part of a syndicate, I do love this space. So I generally will help any portfolio company. So for me, it was then, once you get that step, that far in the road, you get on Angel List, you discover, kind of how this space works. You discover sort of salaries, trends. You can see without even having to put too much effort that, there's 15 meal delivery companies coming. Okay, that's going to be a trend, and then you find out who the players are who are doing a lot of big deals. So in this particular case, I found a syndicate that I liked, Jason Calacanis. He's a well-known angel, prolific podcaster, and just knowledge sharer. And I just resonated with him. I resonated with his East Coast mentality. And frankly, he's just a beast. He's doing 2-3 podcast episodes a day. He's a fanboy of startups. And I just resonated with him. People resonate with different, syndicate leads. I resonated with him. I applied to join. I got in. It was a pretty brief interview. And since that day, I get 2 to 3 deals kicked to me. And the way that works is I get a pitch deck, usually a link to a 15-minute to 30-minute pitch from the founder. And I can do it all in my pajamas from the comfort of my home or the comfort of my Airbnb in Bali, you know what I mean? Which I've done both. And once you're in that world, you get a magnitude of benefit. You don't have to do a deal, or you can do 25 over the course of a year. And the more shots on goal you have, the more likely you'll hit. But the learning you get from being part of a syndicate, and I've been in a syndicate long enough where I've seen some deals go from C to A to B now, where it builds confidence in you to take more shots.
Yeah, it makes sense. So it sounds like the biggest, and Jason Calacanis, he's big time, right? I mean, his Twitter handle is Jason. So he's been an early adopter of a lot of these things.
Yeah.
I'll link those in the show notes. I think it's thesyndicate.com.
That's right. Mm-hmm.
So it sounds like the biggest benefits of joining a syndicate like this is access to quality deal flow, right? They're doing filtering. They're filtering out these beautiful website vaporware sort of startups for you, so they have a bit of quality and they pass some filter, right?
So the one, and then there's actually several benefits in this particular case. In Jason's syndicate, he actually runs an incubator and an accelerator. So for him to make his minimum 100,000 investment, and that's his personal check, the company has to have come to the Bay Area. At least they used to have come to the Bay Area, spent 6 weeks with this team and gone through. So you feel like that they've hit a certain threshold of, grooming, frankly. So not only does he weed the pretty websites and weed the slick PowerPoint decks, he brings them in person, make them go through this, frankly, dog and pony show, but, makes them the best result, the best sort of, put it, like the best way to kind of judge the future success of a company that early on is the ability of the founding team to convince the next round of investors. And I feel Jason and his team does a fantastic job of grooming that initial team to go out for that process. The second thing is, in this particular case, I'm part of a Slack channel, and I've gotten together with investors in the syndicate in multiple places around the country. And Jason puts on about 2 or 3 events, pre-COVID, in real time, and I've attended 2 of them. And you can meet your colleagues, your counterparties in different parts of the country and see what has attracted them to angel investing. And so I've created actually a pretty good investor network just through joining a syndicate.
Nice. Yeah, I can see that definitely being, network is everything, right? So I'm curious, what's the minimum investment value into these startups? And then what is the cost of going through a syndicate such as this?
Sure. So in Jason's, Jason is really big on democratization. So it's hard for me. I'm not quite sure offhand how many angels, LPs are part of the fund right now, but it's a very, very low bar. It's $2K minimum investment per deal. Typically, the more popular deals get oversubscribed, so then it becomes almost like a waterfall method. So minimum 5K or minimum 10K if the deal becomes extremely popular. But literally 2K is the minimum. I think that he takes almost a standard 220 fund management and then carry fee. But I have to probably double check that. But it's actually quite, the two only comes into play once you make an investment. If that makes any sense. So there is no cost until you write your first check into the syndicate, and that becomes part of the money that the team is quote managing. So I get all this information, this community, this network, this free learning from looking at startups and deals and power presentations and sort of founder pitches virtually for free. So I think if you can get yourself into a syndicate, if you resonate with a syndicate lead, and they have a pretty easy low bar for membership, I say do it if you love the space.
And the quality of deals, I mean, you kind of alluded this a little bit, but presumably the qualities are a lot better than something, one of these crowd-funded startup websites where you can do a minimum of $50 like Republic or WeFunder. But what sort of valuations are you seeing on most of the startups going through? What stage of the company? I mean, are they pre-revenue? They've actually started to get a little bit of product market fit.
Right. So the one thing I again, this is where it's really important to find your investment thesis, your investment, philosophy, and aligns with your syndicate lead. So I mentioned Jason's he's from Brooklyn, New York. He is like no pre-revenue, no pre-product. He wants to see 10K, 5 to 10K MMR. He wants to see things that are off the ground. He wants to see a paying customer. Of course, there's exceptions, but he's not that visionary. Like here's $1 million check. Go do what you want. So, but has that served the syndicate well? Well, he's done 6 or 7 investments into quote unicorns. Calm.com, which is why hugely popular, was the first deal done by the syndicate. Unfortunately, I wasn't part of the syndicate then, but there's been a handful of notable ones. Lambda School, just ones that if I dropping names that I think the world will know about and not realize that they were baby companies, part of a syndicate, almost never came into reality. So nice. I've seen pretty quality deal flow.
Good. So last one on angel investing. Sure. It's a fascinating space. What advice would you give to somebody? I mean, you've alluded to this in a bit within our conversation, but what kind of main advice would you give to somebody who wants to get started in angel investing?
I would say
besides be an accredited investor.
Sure. I mean, I think that one of the ways to to become an accredited investor is, well, listen, I think there's things in the works that's going to actually remove that barrier as well. So be patient as far as that. I think that is one route. If you have the opportunity to work for a startup, do that. If that ship has sailed, get to know as many startup founders as you possibly can and be as helpful as possible. It's never a smooth ride, right? So you got to be a therapist, you got to be a coach, and you frankly got to be like a low-level employee. If they're dealing with the question that you don't have the answer of, it's not like, hey man, I can't help you, or hey, hey, I just, it's not part of my domain. If they are your classic founder, they have so many things that they're juggling, that you might be the person that has to kind of go out and find that for them. So take that approach before you write your first check, because once you write your first check, you're going to have to do that plus more. So kind of put on your your critical thinking, your coach, your life coach, your mom and dad hat. And if that's part of your DNA, apply that and see if it's for you in the first place. If you're just starting out, I just think, unless you're like, you got a credential, you went to one of these elite universities, you can get yourself to Silicon Valley or New York City, and that's kind of maybe the way you had to do it. That was one route. I think going forward is just like I said, getting on angel list is free. Creating a website, creating a company, creating an investment thesis for yourself before you make a first investment, like I did, is a way to go. What passion, what are you passionate about? Are you passionate about renewable energy? Are you passionate about, you could just see the world's changing. Pick one of those niches and say, hey, like, I may not have dollars to put behind something right now, but I have time, and the sooner you pick a niche in the space, the sooner you can find people who can kind of pull you in and find the, into the world of angel investing.
Good stuff. I love it. Shifting gears a bit. So it sounds like you really spend a lot of time monitoring and trying to understand the bigger pictures behind financial markets in general. So these mega trends, these things that are impacting the publicly traded markets. So perhaps share a bit of your macro view kind of on global markets as they stand. And this is being recorded the end of July, but something that's, will last a little bit longer than like in the next month sort of thing.
Absolutely. But we did this, like a couple of months ago, and the sky was falling. And if you would have told me where we are right now, and as far as financial markets, I would have thought you were talking about like 2025, not 5 months.
Who knew, right?
Who knew, right? And do we even have a free market system? Is this capitalism? Are we living in some sort of dystopian socialism for the rich, or people who are the investor class, and, capitalism and free markets for the rest? I'm dealing with a lot right now, from a moral standards. There's a lot of things happening in the world. There's a lot of things happening, fissures and problem and cracks that are happening in the United States that are getting exposed to a magnitude scale that I've never seen before. And it's actually, for me, it's very positive, the amount of, frankly, the sort of extent, the amount that the Federal Reserve and fiscal and monetary policy that's happening across the world, not just the United States. It's like we get to see firsthand sort of a dry run at like modern monetary theory, MMT. We're going to see literally what universal basic income, things that we thought would bring down or dilute or kind of just break our system. We're getting a dry run at it right now. And I think the reality is that, the rich have done very, very well. The investor class has done very well. And I'm actually very, very worried about inflation in certain aspects of the economy, specifically financial instruments and real estate. As you know, as an investor, somebody who's invested in real estate, you get a cost basis once you buy a property, and then you pass it on to your renters or your tenants. And that has made living in most American cities for your standard blue collar, bartender, waitress, chef, FedEx driver, a task that's almost too tall to bear, and should it be that way? So I would say that we're at a point where it's not sustainable. So it's going to have to be addressed, and it's going to be addressed pretty soon. It doesn't matter who wins the election. And this is taking a very like American and U.S. centered viewpoint. But for me, ultimately, I'm I'm positive. I feel like the world will, I feel like I don't look at my bottom line as I look as my my crew's bottom line, and if, I think that things are breaking. We might have policies that, make certain aspects of the economy grow a little bit slower, but if it brings more people into the fold, I'm perfectly happy with that. I never got into investing to just create wealth indefinitely. It was to improve and solve problems, improve, people's conditions. Those are the startups I always gravitate to. So I feel like we're going to have a tremendous amount of opportunity. Right now, what I'm seeing in the short run is I'm seeing a lot of party politics and Fed backstopping of financial assets, and I'm seeing frothy market. I'm seeing I'm seeing a lot of like gambling behavior. I'm seeing a lot of like euphoria. I have no idea where this is going, and I'm also seeing Uber drivers who pick me up and say, hey man, like this is hard. Like we're scared. You know what I mean? Like you're my first pickup of the day. It's like 2 p.m. You know what I mean? So for me, I'm looking at this event as something that might inform my role in the world. I think I'll always be an investor. I love the Jim Rogers. I love the motorcycle, investment biker. I love that story. But ultimately I care about my like fellow humans, and I feel like this might, the world's going to present opportunities for me to back and support startups and companies and make investments that, get the world to a more equitable place. That's what I'm excited about.
Yeah. So I'm curious, everything that's happening right now, I just keep using the word unprecedented because it is in fact unprecedented. We don't know this QE unlimited,
It was absolutely
all of this stuff, right? The stimulus printing, it's just wild. So I'm curious, what narrative do you consistently hear within the markets that you completely disagree with? Right now it's there's a lot of people thinking about sound money. So there's money flowing into gold, silver, and Bitcoin right now because of the eventual inflation and debasement of the dollar. Is there any investment thesis that you consistently hear that you disagree with?
There's several. I'll start with the one that you said it perfectly. Like we are debasing the currency. And it seems like there's a race right now. It's a two horse race between gold and Bitcoin. And it's like, and in their role, individually in an investor's portfolio, is gold an insurance policy? Is gold a hedge against a falling dollar? Is gold a tool to? Are we going to actually barter in gold when all hell breaks loose? And then Bitcoin, which kind of more on a sort of accounting level, I understand, and it makes a whole lot of sense. And I have a percentage of my portfolio in Bitcoin, but from an adoption level, we ultimately we know that we trade dollars. We have the full weight of a U.S. government, behind our back, but we also transact in fiat currency because we can do debt instruments, we can write loans, and you can do IOUs, and as much as someone who's been so like flabbergasted and discouraged by the basement and sort of what's happening in financial assets and sort of way they're being priced and sort of risk being eliminated because trillions of dollars can be literally thrown onto the, thrown into the marketplace overnight. I am all for a blockchain based system. I just don't know when or how we'll ever get to a place where it's mass adopted and we can do contracts between me and you for services, goods, exchanges of property, whatever. I'm hopeful. And I've seen some extremely smart people saying this is the event. Just wait and see. That's just the one where I'm like, I bought it. I don't know why I bought it. I don't know where the price would have to go. Probably like I'm out, up or down. You know what I mean? So it's one where I would say I have the biggest blind spot. Beyond that, I mean, I was whether the Bears went out, the Bulls went out, I have no clue. Is Tesla overpriced or underpriced? I have no clue.
How are you positioning your portfolio accordingly?
I'm taking a momentum strategy, frankly. So I have been playing the price volatility of a lot of these, Robinhood stocks, for example. But I think the thing that everybody who is in sort of my age bracket with my amount of years of experience is we all were formally trained in business school to do a discounted cash flow analysis, to study historical PE ratios, to kind of price the market as a whole and price an individual stock. And all of us tried to do that in March and April. And we sat on our hands. We had weak hands and the market just blew by us, right? And some of the smartest people, the most people I respect the most, are saying they don't know. So who am I to say? The one thing I see is stocks. I'm seeing investors favor certain stocks, certain industries, and it's just going and it's ripping and it's not slowing down. So do I sit on the sideline and say, hey, is this priced correctly? Is it cheap or expensive? Right now, I'm just riding that train, and it's been a learning experience for me because I'm thinking that once this all settles, we will have to come up with new pricing mechanisms for this market. But right now, I am joining the party, frankly, cautiously. My hedges are in Bitcoin, gold, and a large allocation of cash right now.
You keep your finger on the pulse of a lot of these financial markets and startups. What are your top 3 sources of information to kind of stay on top of all of this stuff?
Listen, to me, I think and I am a Spotify investor. I think podcasts are phenomenal. I've been incredibly amazed at, a market event can happen and 2 hours later, there's a long form, hour and a half plus episode with one of those market participants. It's like, or I can have a 3-minute, soundbite on CNBC. So for me, if you find podcasts that you resonate with, where the host or the team can get on, high level guests, when real time events are happening, hit subscribe. Your learning will go through the roof because it doesn't matter if you have an MBA, it doesn't matter if you're 20 or 60, the world is changing rapidly. So we all have to kind of sit and learn, sort of pay attention because we have no framework for a lot of the things that are happening. So it's almost like a very democratic system. You follow the right people, listen to podcasts, listen to the right podcasts. The information is right. It's right out there. As far as, and then I have I do think that second kind of peg is my community and my network, have a community that is in multiple different spaces. Have a community that's, in the startup world. Have a community that's physicians, one of the most valuable thing for me is that I have a lot of friends who are doctors and nurses. My brother went to medical school. My couple of best friends did. So I get to kind of hear their perspective on COVID, the world, washing hands, wearing masks. And I don't, it's just another, if you're young, another reason to, have a big and broad, diverse community. So, people in all different industries and fields. It doesn't necessarily have to inform the way you invest, but it can inform the way you think and inform arguments. So for me, it's been podcast, my immediate community, and just to add to that immediate community thing, if your life presents you the opportunity, travel, because you'll make more friends from around the world. The world doesn't think the way Americans think. The world thinks in its own unique way, and they value different things, and things are happening in Germany right now that are significant and important, just as important as things, are happening here in our borders. So think high level. And I think the third one would be, just I'm informed a lot by my life experiences, and that just takes time. This is my third financial crisis, I would suppose. I've been through a natural disaster. I lived in India for 2.5 years. So I have perspective, So it gives you perspective that like your personal bank account can go up and down, but to the rest of the world, you're unimaginably wealthy, So that's the way I've been thinking. That's the kind of woo-woo answers. I mean, read the news, read the Wall Street Journal, follow the right podcast, CNBC, those type of things. If you're in financial markets, if you're in other things, find the people who have the credentials, or get the people. Maybe they're not credentialed, but they just are prolific and they get great guests, and listen to them.
Definitely. I'm curious. Have you read any books recently that have helped inform your macro view of financial markets or anything like that?
No, but I have a whole list of them because they're getting recommended on every podcast I listen to. Right. I would say my thoughts on books right now are it's good to have a historic perspective, but like I was listening to a podcast with Mark Cuban just from yesterday, and he's like, we're living through in real time an MMT experiment, So what book is going to inform me on that? There's so many books that said if we did this, these events will transpire. Well, why not just sit and watch?
They're all theoretical too. Yeah,
they're all
right?
theoretical, right? When I was in school a decade ago, when we saw what the Federal Reserve did to sort of QE1, QE2, QE3 to stabilize the financial markets, we were told like this is a once in a lifetime event. The magnitude of what we were doing in 2010 was never going to happen again. And here we are a decade ago, and it's tenfold, right? So I'm not advocating not reading books. I'm saying the amount of time it would take me to read one book, I can knock out 4 or 5 podcasts. Kind of actually just go out of my apartment and see what's happening in the street as well. Just walking around and listening to your neighbors, listening to your people at your CVS or your store or takeout. Talk to your Uber driver, because that is the real world, right? What they're experiencing, what they're feeling, what they're that is what's happening.
Very valid. Well, Vic, how can my listeners find out more about you, Krewe Capital? Where do you want me to send them?
I mean, I'm on Krewe Capital on Twitter. I have my Krewe Capital website. I have a friendly, drop down, say hello. Instagram is just my name. Facebook is just my name. But yeah, just stay informed. I mean, I love to talk to smart people. I love to talk to informed people. The world is changing right in front of our eyes, If you have an expertise in one particular field, I love to learn too, And so yeah, just reach out. I'm pretty easy.
Awesome. I'll link all those things in the show notes. Anything else for the listeners?
Just keep your eyes open and think long term. I just think, like, I think think about the idea of, return on your time beyond just dollars, friendships, relationships, community, to me, has always provided way more dividends. And now, frankly, with Zoom and, you can put yourself in some really interesting, eclectic communities, people around the world. If you couldn't travel before, well, the travelers can't travel right now. So, finagle your way into a Zoom call with people who are into things that you thought you would be into. Take advantage of this time. We won't have it again. And yeah, just stay positive. The world always comes back. It lands on its feet.
Very wise words. Hey, Vic, really appreciate you coming on today. Thanks so much. There you have it. Thank you for listening. I really appreciate your support. Show notes, transcript, links, and more can be found on our website at altassetallocation.com. If you'd be so kind, please share this with anyone you think might be interested or get some value from this conversation. If you have any questions or comments, please reach out. I'm always happy to hear them. Lastly, if you're on YouTube, please like the video or subscribe to the channel. If you're listening to the audio version of this, please subscribe to the podcast and or leave a review. This really helps more people find the podcast, and I really appreciate it. Thanks again, and hope you have a fantastic day. Happy investing.